In this video, we want to talk about Micron, and over the last 6 months, the stock is down 30%. And just on the earnings that they announced a couple of weeks ago, stock is down another 16% or so, totaling roughly 30%. However, there is some good news on the horizon. From a technical standpoint, you have this massive monthly buy level at $80. And as you can see from previous months, last 3 times, that represented a buying opportunity for those who saw the stock trading at a discount. Also, this level coincides with what was previous all-time highs, which is now, or was, resistance. Flip that, is now support. Now, from a fundamental standpoint, let's get into this article. So Micron reported fiscal Q1 revenue of $8.7 billion, an outstanding 84% increase from the prior year. Even better, the company swung to a profit of $1.79 per share from a loss of 95 cents in the same quarter a year ago, driven by terrific surge in its margins. Speaking of the margins, operating income margin surged to 27.5% from the negative reading of 20.2%, again in the same quarter just a year ago. Micron benefited from a big surge in demand from data centers, where the rapid deployment of chips for AI model training and inference applications have created huge demand for computing and storage memory. As an example, Micron's data center revenue surged a massive 400% year over year in the previous quarter, accounting for more than half of its top line. So why did the stock drop, right? This is all great news. So high bandwidth memory demand has been increasing at an incredible pace, as this market was worth an estimated $4 billion last year. Companies such as Nvidia and AMD have been packing high capacity HBM into their accelerators to boost performance, which explains why the size of this market is expected to grow. Again, why the bad news? Though Micron enjoyed outstanding growth in the data center business last year, weaker than expected demand from consumer-oriented markets such as smartphones and personal computers weighed on the company's outlook. However, Micron believes that the growth of the PC market will be weighted towards the second half of 2025, and it has a similar view on the smartphone market as well, where AI is driven an increase in memory consumption. Now, Micron investors should note that both the Gen AI smartphone and PC markets are expected to clock outstanding growth in 2025 and beyond. So the weakness in consumer-oriented markets shouldn't last for long. With Micron shares currently trading at just 12 times forward earnings, investors are getting a solid deal on this AI stock that has been delivering outstanding earnings growth and is likely to sustain its momentum. So those are the fundamentals. You got the technicals. Let's look at what could potentially be some roadblocks ahead. So you can see at this 112 level, this has been resistance, not once, not twice, not a third time, but a fourth time. And so that would be a target 1. Let's scroll down to the daily chart. And since the sell-off after earnings, price has been basing. And this candle, screen candle, is your candle that's in control. Meaning, if you start seeing candle closes above this level, that would signify price is going to move higher. Get candle closes below, look for price to move lower. Nevertheless, you do have this huge gap that needs to get filled at some point in the future. And that also represents that there are no sell levels until you close this gap near this 104 level. So again, not a bad entry to get long. You are protected by this monthly buy level. Again, look for your first target to come in near that 110 level. Thanks for watching. Subscribe, please. Like the video.